Let's bring in our regular panel now. Former Liberal MP Fiona Scott, former Greens advisor, now at DPG Advisory, Ben Oquist. Great to see you both. Ben, let's start with the rate rise today. Obviously difficult in economic terms for the punters, for mortgage holders. It's a tough bit of news before Christmas, but for the government politically, always rate rises are tough to manage.
Yeah. You would think these would be very, very politically difficult times for a government. Energy prices skyrocketing, inflation, interest rates at not record highs, but record highs in recent times, and extensive rises coming again today of eight in a row almost. You would think that would be very difficult political times for the government, but you'd have to say the government is doing a good job of managing it, explaining to the population that these are factors largely out of their control. I do think, though, there is a risk with what the RBA is doing, in the sense that these inflation figures are driven not by excessive demand, although that's one component of it, but much more by supply factors. And you heard the Treasurer talk about the war in Russia and energy prices. And really, if we're going to contain inflation, we need to address those supply side measures more than the blunt instrument of endless interest rate rises. That's why it's so important the government lands an energy policy. That's why its childcare reforms are important. And that's why it's really important that we counteract this narrative that somehow it's wage rises that are potentially a problem that's causing inflation. It's not. And unless we see the correct reasons for why inflation is happening, we won't come up with the correct solutions.
Fiona Scott, you look at the politics at the moment and the government riding high, the latest poll in the Sydney Morning Herald suggesting that they're ahead, not just in two-party terms, the Prime Minister's further ahead as preferred PM. On every economic front, they're ahead as well. But these are rough waters they're heading into, not just at the end of this year, but well into next year.
Yeah, look, I agree with Ben's comments there, but would slightly err in the aspects about wages. I don't think it's necessarily the thought that wages are what's driving inflation at the moment, but it's more the impact of that IR bill that, should that come to fruition, and the pressure or the intent of that bill to also increase wages, it will mean that this inflationary pressure will continue going on, and will continue meaning that increasing the price of people's mortgages will be the blunt instrument that is continued to be used. And of course, increasing interest rates on people's mortgages and small businesses and all of those sorts of things is not necessarily the whole economy. There's people on the other end who would be earning more income by having interest rates going up because they're sitting on the other side of that ledger. So I think the challenge here for Labor was that in many ways, with the war in Ukraine and of course the stimulus that happened through COVID spending, that these inflationary pressure was very well known before even the May election, and that the Albanese government was going to walk into these very strong economic headwinds. I mean, we've been hearing that for a good 12 months now. So in many ways, that's been expected, and I don't think we are going to see the impact of that until we see a lot of people's fixed rate mortgages come off. It's also a matter of how, going forward, some of these things shake out. I mean, things like the supply chain issues coming out of China continue to being locked down, and the time that it takes to get goods and services out of China. The other aspect of that, of course, is going to be around what energy prices do to the mix. So, look, the economy has a long way to go. I think in many ways the country is still taking a bit of a deep breath as we're waiting for these impacts to hit. And it's a shame that in many ways that we are relying on this one blunt instrument.
It is, and as you say, that lag impact, and there are many with fixed mortgages going to really face a massive immediate impost almost overnight when those fixed mortgages end over coming months. Ben, I asked the Treasurer just a little while ago, does the IR bill have any risk at all in terms of contributing to a potential wage price spiral that the RBA has warned against? He said no, flat out no, that's not the case, but they're certainly trying to drive up wages at a time when inflation is a massive risk, Ben.
I look at it in the big picture sense. We've got to drive up wages at some point. previously it was the wrong time and now it's the wrong time. You've got to look at it over a slightly bigger picture, longer term. The wages share of GDP is at 50-year lows. In fact, record lows since statistics have been in place. You know, the wages share of GDP has dropped from 55% to 44%, while the profit share of GDP has doubled over that 50-year period. Something has got out of kilter. The economy is not working overall. And I see the industrial relations reform as part of a bigger reset that something needed to be done. As Jim Chalmers was just saying, we've heard for a long time now from the IMF, from the World Bank, that low wages growth has been a drag on economic growth overall worldwide. And that was because employees and workers didn't have enough bargaining power, and we needed to help reset that. Now, these aren't massive radical reforms, but they do help address that. And the government really had to do something about it, and they have. Now, how that plays out over the next months, we'll find out. But something had to be done about that big picture structural imbalance.
Fiona, quickly to you to wrap up. Do you think there will be a deal done on the energy issue later in the week?
Certainly hope so, because we need it to be done, don't we? I mean, the country needs it to be done, Kieran. We need to be able to find an impasse here, and let's hope that, like the Treasurer the Treasurer has said, that the Premier and the government come together and find that impasse, because, you know, we cannot continue to have energy prices spiralling the way they are, because it's going to hurt a lot of people who are, you know, also seeing their interest rates going up and struggling to pay their rents.
Fiona, Ben, see you next week. Thanks,
Kieran.